Shakira could be facing up to 8 years in prison due to alleged tax fraud. And that's a story that I wanted to parlay into one of my favorite companies that I really hope to invest in the near future, which is the tax preparation company H&R Block. That's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up guys, and let's go right into this story. So it was reported here by the Associated Press that Shakira could face up to 8 years in prison and a $24 million fine for an alleged tax fraud. But my natural inclination whenever I hear any stories associated with celebrities is the media overplaying their hand? And so we can see that prosecutors in Spain said on Friday, from the time that this article was reported, that they would ask the court to sentence Shakira to 8 years and 2 months in prison if she's convicted in her expected trial for the alleged tax fraud. So the first thing is, this does not look like headline bait. This looks like it's very real and an emerging story. And so effectively what's happening is that she failed to pay the Spanish government $15 million in taxes between 2012 and 2014. And Shakira actually rejected the settlement deal that was offered by prosecutors, and she opted to go to trial. And so she probably feels like she has a case here, so we'll see what happens. And Shakira's Spanish public relations team said earlier this week that the artist did deposit the amount that she is said to owe, including $3 million euro of interest. And so why is this even an issue? Well, it looks like it's a deemed residency issue because prosecutors in Barcelona have alleged that Shakira spent more than half a year between 2012 and 2014 in Spain, and so she would be a deemed resident in that country, and so she would have to pay taxes in that country. And truthfully, I personally just wish her all the best because this is one of those really funny situations, and I just really hope that she has a strong tax accounting and litigation team. And so in addition to that, another emerging tax related story right now is that the IRS in the US just got the green light to hire over 87,000 new tax representatives. Now, some of those people are going to be offsetting people that quit over the next 5 years, but it is an expansion of the IRS. And now the politicians are saying that none of these new agents are going to be going after people that earn under $400,000 a year in income. However, the politicians also voted down proposed legislation that would prohibit those IRS agents from going after people who make under $400,000 a year. Now, I don't know the full story here, but what it does tell me is that you really need to get your taxes in order. And there's a great company that can do that. They provide a wonderful service for US residents, and that's H&R Block. And from the perspective of investors, that's a great company to be invested in an environment where people are going after those who are not paying their alleged fair share in taxes. Now, if you haven't seen H&R Block, this is what their front store fronts generally look like. Now, what do I like about H&R Block? This is a slow growing, slow and steady type organization. They focus on small businesses, they offer financial products, and they're expected to grow between 3 and 6% a year. And so slow and steady generally wins the race. And so I like to have a part of my portfolio invested in sort of like these slow, high equity yielding type companies. And so H&R Block is one of those names. Now, the first thing I looked at with H&R Block was their balance sheet. Notice here, this is from their presentation, that they're looking to maintain leverage on their balance sheet, which is something to consider when valuing the company. Now, I always tell you guys that I penalize companies for the 100% of their debt that they carry on their balance sheet, but I'm also telling you guys that I'm very conservative. So when I do show you my valuation, just keep that in mind because you might want to value the company at a price that's higher because you're not penalizing them completely for that debt on the balance sheet. And from here, you can see that H&R Block is a free cash flow shop, and they're expected to continue generating cash for investors and paying out through share buybacks and dividends. So the question is, how am I forecasting out their revenues into the future? Now, here's a model that I prepared for the Patreons. They can log in and see the whole model and all of the lines at the most granular detail. Notice how I'm providing them with a very steady growth rate. Now, they're forecasting between 3 and 6% growth. I'm giving them 3% annualized growth. I might actually up that at the end of this video to get it to around 4.5% a year. Now, how exactly are they getting to that growth target of 3 to 6% a year for revenue? Well, notice that just the growth of the industry plus pricing power helps them get largely to where they want to be. It's easy to forecast greater than the midpoint of the range, i.e. 4.5%, that they've provided, because they're giving you other areas where they expect to continue to grow too, which is one, the franchise acquisitions that they continue to do, and two, the continued rollout of their Wave product. And Block Horizons is another upside here that nobody's valuing in, not even H&R Block. And you guys may have been asking, what exactly is that Block Horizons? Well, that's really just financial products. So you can see here that there's mobile banking solutions being launched at early next tax season. So as part of the upside, which is not factored into the 3 to 6% annual revenue growth, is that sort of new type of solutions for companies. And I see them adding more and more into this as time goes on. One of the areas that I would really be interested to see if they would add it on is sort of like that receipt tracking, mileage tracking, etc. Now, just moving into their cash flow statement, you can see that since 2012, they have generated approximately $4.8 billion in free cash flow, and they've paid out $5.6 billion to shareholders through buybacks, approximately $3.5 billion in buybacks, and dividends, approximately $2 billion in dividends. And early in the video, I did tell you guys that one of the ways that I generally undervalue companies is I penalize them completely for their debt on their balance sheet. So what I did here was I actually discounted their debt for the year at which it comes due. Now, I know that they're going to probably hold on to at least that 2030 amount of debt, so I might still be penalizing them a little bit more. They'll just continue to roll it. But at the very least, that I've discounted that debt that's on their balance sheet, so I don't penalize them too much in the valuation. Now, once again, for the Patreons, you can get access to this model and just see how I did it and determine for yourself if that's the way that you'd like to discount their debt, or do you want to just take that whole 650 amount at the bottom there and give a zero value for it, because you know that they're just going to hold on to that debt into perpetuity and then forecast out interest expense. Now, before I go into my valuation, guys, I just want to point out that approximately 80% of the people that watch this channel are unsubscribed. So if you could, please consider subscribing to the channel. I'm really hoping to grow the channel so that YouTube extends its reach and helps other people. Now, moving into the valuation, notice that I'm giving them a 15 times multiple, which I think is good. I'm valuing them at approximately $45 per share. And so at the current share price, at the recording of this video, it's trading at approximately 87% of its intrinsic value. I would really love to buy this company under $30 a share. I actually don't think that the shares go back under $30 per share, but here's a very interesting story. So earlier this year, I was talking to the Patreons about this and said I wanted to buy it under $20 per share. That was way too greedy. I was way too excessive there. I should have probably bought it at $25 per share. Quite a few of the Patreons did buy it. They did well with it, but here's one of those situations where I get too conservative or I get too greedy with the share price that I'm looking to buy securities at. And a lot of the times I make the mistake of omission. Now, it's not like my portfolio is hurting. I'm up a considerable amount this year, but this is one that I really wish that I put in the portfolio and I just held it forever. I would have held H&R Block for the next 40 years. That's how much I believe in this company. They have a really strong moat. They're on pretty much every street location, and the company is still growing. And so it's a huge mistake that I waited for it to go under $20 per share, and I'm paying for it in terms of like lost income. Now, another slow grower that I actually did purchase so I didn't lose out on that lost income was Vista Outdoors. And that's an interesting position right now because the company is actually going through a spin-off, which has created a substantial amount of value that I don't believe is being represented in the share price. And for you to get access to that video, click right here.